Aotearoa, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. Financial markets can now taste a US Fed rate cut. Today, all eyes are on tomorrow's August non-farm payrolls report for the US. Analysts expect them to rise a minus 75,000, but overnight labour market data suggests that may be optimistic. First, US initial jobless claims rose last week to 197,000, when seasonal factors suggested it should have fallen. There are now more than 1.89 million people on these benefits, 90,000 more than the same time last year. Announced August job cuts came in at 86,000 in August, 40% more than in July. So far this year, companies have announced 892,000 job cuts, the highest year-to-date level since 2020, when 1.9 million were announced. It is up 66% from the same period last year and is now 17% higher in 2025's 8 months than all of 2024's full calendar year. Maintaining the weakening theme, the ADP employment report only reported job gains of 54,000 in August, well below the expected 65,000 and below July's 106,000. In August 2024, this data showed a 180,000 rise. US labour productivity is improving, however, with faster rises in output, while labour hours only show a modest increase. Year on year, this productivity measure is up 1.1%. And there was better PMI data out for the US services sector, with the widely watched ISM version expanding slightly more than expected, while the S&P Global Market version expanded better, even if it was adjusted lower than its original flash version. Encouragingly, in both versions, new order flows kept the metrics positive, and they're now at similar levels to a year ago. US exports were little changed in July from a year ago, as were the level of imports. That resulted in a goods and services trade deficit almost identical to a year ago. Still, it is now at a 4-month high. Tariffs have yet to move the needle either way, other than collect much more tax from importers. Financial market reactions to this generally downbeat economic news was upbeat, on the basis that it makes the Fed rate cut on September the 18th, our time, more likely. Equities rose modestly, but bond yields fell quite hard. Meanwhile, Canada also said its exports and imports and trade balance was little different in July from June, although quite a bit worse than year-ago levels. But their deficit is still quite small in relation to the Canadian economy, and their smallest deficit in 4 months. In China, they're rolling out a new policy to try and juice up consumption, state-subsidised personal loans. Like the rest of the world, but more so in China, more debt is the answer to all their economic problems. With headline inflation at just 1.4%, the Malaysian Central Bank kept its policy rate unchanged overnight at 2.75%. And EU retail sales slipped in July from June, but they remain 2.2% higher than year-ago levels. They report on a volume basis, so these gains are real. In Australia, household spending is strong and rising. It was up 5.5% in July from the same month a year ago, up 0.5% in July from June, which is an even faster rate. That's the third month in a row it has risen, and it has risen in 9 of the past 10 months. In July, this spending was concentrated on services, especially health services, hotel accommodation, air travel and dining out, but they actually cut back on spending on goods. Meanwhile, the Australian trade balance turned up after a series of declines. Markets expected a $5 billion surplus in July after a $5.4 billion surplus they got in June. But in fact, the surplus came in at $7.4 billion in July, helped by a 3.3 monthly rise in exports and a 1.3 monthly fall in imports. That means the surplus hit a 21-month high. And global container freight rates were virtually unchanged last week from the prior week, although still down massively from the Red Sea crisis affected a year ago. Interestingly, outbound rates from China to the US rose as sharp as 8% or more last week, but that was balanced by large falls in the China to Europe trade. Bulk cargo rates are still in a narrow band, little change from last week. The US Treasury 10-year yield is now at 4.17%, down 5 basis points from yesterday at this time. And the price of gold will start today at $3,543 an ounce, down $30 from yesterday. American oil price is a little changed at just over $63.50 a barrel, while the international Brent price is 50 cents softer at just on $67 a barrel. And the Kiwi dollar is now just on 58.4 US cents, down 40 basis points from yesterday. Against the Aussie, we're down 20 basis points at 89.6 Australian cents. Against the euro, also down 20 basis points at 50.2 euro cents. That all means our trade-weighted index starts today at just over 66.1 and down 20 basis points from yesterday. And the Bitcoin price starts today at $109,830 and down 2.3% from yesterday. Volatility over the past 24 hours has been modest though, just on plus or minus 1.4%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.